Good evening, this is Ken Long from Tortoise Capital on September 22nd, 2014. We're going to take a look at a interesting swing trade frame in Caterpillar. That's been one of our favorite trades over the last month or so. And I want to just orient you to the screen. So we're looking at Caterpillar on daily charts, thanks to the good folks at freestockcharts.com. This is my current favorite technical indicator setup here, so let's just see what we have. We're looking at candles. The dark blue shaded area in the middle is the river, the 30-period Bollinger Band plus or minus 1, with the midpoint being the Bollinger Band mean being that red line. That's a 30-period simple moving average. The outer blue shaded area, the lighter color, is the floodplain, and that's the Bollinger Band 30 plus or minus 2 periods, and then the outer red lines, or the red line, is the 30-period Bollinger Band plus or minus 3. That's a really extreme move. This pink ribbon looking thing in the middle is the dragon. That's a 10-period Bollinger Band plus or minus a half, and that's about 6 times more adaptive than the river, and so this often gives us signals on turning points. We've been using it as a noise boundary, as a confirmation of a move. These black dots are a parabolic stop and reverse, and you can see I'm using a 0.2 and a 0.2, so it's considerably more adaptive than the default setting, which is like 0.02. And so what that often gives us is early confirmation that the trend is reversed. So like 2 dots after reversal tells us we ought to be looking at the long entry here, and that sort of links up with our regression line crossover. So now we've got 4 regression lines, moving regression lines on here. This fast one is the 10 period, that's the blue. Next one is the 30 period, that's the black. So the fast pair is the 10 and 30. The slow pair is the 90, which is the green, and the 270, which is purple. So there is a fractal quality to that 10, 30, 90, and 70. And so some things I want you to just notice in this envelope of various degrees of normality, which the Bollinger Bands give us, and then the directionality of trends, which the regression lines give us, is that this sideways quiet channel breakdown gives us reasons to get short when price now crashes through the long-term fair value, which we treat as the 270 regression line, and it breaks down here, and then the sell-off gets all the way out here to z minus 3. A z-score of minus 3 means that it's 3 standard deviations below the Bollinger Band mean, which is what that red line tells you compared to this Bollinger Band mean. We get a regression line fractal framework moment, an RLFF moment, when we compare the difference between the fast regression line in the fast pair, which is the 10, and compare the distance to the slow regression line in the slow pair, that's the 90-270. So the difference between the 10 and the 270 now, in our view, describes the opportunity that's available in the temporary disconnect in the psychology of fast traders and slow traders. And so price is going to correct one way or the other. It's normally back towards that long-term fair value, which the 270 represents. And so this yellow bar highlights the difference between the short-term panic psychology of the fast traders and then the long-term psychology of the buy and holders, which is the 270. And that's the difference between about 109 and 100, so about a 9 or 10% difference in the estimate of the fair value of Caterpillar. And so it's hard for price to stay that extreme at z minus 3. It starts correcting. This would be our normal entry here on pattern 7, which is a re-entry into z minus 2 with a stop down here at z minus 3, and you can see that that would have turned out to be a really nice trade. You can also make that trade not later than re-entry of the river with a stop at the z minus 2, so you use a 1 standard deviation stop in that idea, and then you're looking at a 2-to-1 reward risk ratio here of back to the mean, back to the far side of the river. That gives you the 2 units of reward for the 1 unit of risk. We get the confirmation in pattern 1 of the RLCO here when the 10 crosses the 30 outside the river, and we can make that entry here, targeting the Bollinger Band mean and then the far side of the river with a stop below the swing low, approximately where this red line is showing previous support levels. Price crossing through the dragon we take to be significant. The dragon, you could actually even buy that with a stop below the dragon and you're fine. And now what we're doing is studying the information that's contained in the Bollinger Band structure of the dragon and that parabolic stop and reverse. And what we notice is that when we get a reversal of trend and then we have a multi-day trend, that in many cases that parabolic stop and reverse acts something like a spine for the dragon. So we're studying what that might mean. I like the early warning of the first 2 dots on the trend reversal, and then I like the profit preservation that those dots represent, which very much tracks my own intuition on how to preserve profits in a move. The trade goes from RLCO outside the river to RLCO outside the river. This tells you that that leg is done. It's not surprising that it comes up and starts stalling here where it was at fair value before, and now the distance between the 10 and the 270 is negligible. And now the counter trend rally is from an RLCO here. The target is back to the Bollinger Band mean, which actually happens. And it's interesting to see just how symmetrical these moves in Caterpillar can be. That's a 9 to 10% move in the matter of a couple weeks, and that's certainly tradable. And now we're in the condition right back here where we have this leg down, leg up, leg down, and the potential to find support here around 100-ish. And its price is already right at that boundary of the C-3, so this could be an RLCO moment in the same way that this was an RLCO moment and this was an RLCO moment. And we also have an RLFF moment. The size of this yellow bar is the same as the size of this yellow bar. So in order to frame this trade in the usual way, we're really anticipating that if it finds support here and holds around 100, and then price reverses and starts coming back, we can enter at Z-2, which is about 102.40, or just a little bit above yesterday's daily high. And we'd have a stop down here below the Z-3, and our targets, if we're entering somewhere around the edge of the floodplain, our initial targets are 1R at the edge of the river, 2R at the Bollinger Band mean, or the midpoint of the river, 3R at the far side of the river, 4R at the far side of the floodplain, and then something like fair value. And if we get something like a symmetrical move, then we're looking at somewhere around 110 to 111.5 or even 112 if we got all of that move. So that's why this is a swing trade moment, and it's a critical state because if this support level collapses here, then we would not be surprised to see the same kind of 9% sell-off that we have, and then featuring with a couple sharp down days when that support level cracks. And you can see just how much Caterpillar can move to the downside when support cracks. And so this is one where we're ready to go long above 102.40 and short south of 100. So that's the trade frame in Caterpillar using the regression line fractal framework and the RLCO regression line crossover framework to frame decisions, and with some of the technical indicators that we like. So take good care, keep your risk measured, and your powder dry.